And
Yeah, and to me, that's the biggest thing that I keep harping on. It is the disappearing inventories off of all of the major exchanges, and in this case, off of SLV, that is betraying the price suppression. And because if value was an indication of it, who would be taking this kind of possession? And it's happening across the board, everywhere you look, and it's happening in gold too. Just the other day, on January 11th, one trader took possession of 1,223 contracts of gold worth 230 million, and then 3 days later took another 505 contracts worth 96 million. Price, whether you're talking gold or silver or whatever commodity you're talking about that has been suppressed, that price is being used specifically to misdirect the public and allowing the biggest money in the world, the money closest to the information, the money that wants to de-dollarize and have tangibles in their possession. It's very telling that this money is grabbing at a massive rate from all of the main exchanges. You can even look at aluminum and zinc. We're down like 75 and 90% respectively off the LME. And a report just came out that said China holds 20% of the entire aluminum stockpiles in the world. So they're buying as much as they can from the exchanges while they will allow them to sell it, and using paper derivatives to suppress the price. Now, I should have asked my head trader this question, because I didn't know that I'd be on here with you, but I asked him the other day what it would cost for us to buy a 100-ounce gold contract, because I wanted to explain how they suppress stuff so easily, a bank like Bank of America. And I asked him, I said, how much would it cost to buy a 100-ounce gold contract? This is when gold was 1875 or whatnot. And he said, well, the actual trade only costs a few dollars. We have to have $6,900 in our margin account to control what amounted to $188,000 worth of gold. And so you're talking 27 times leverage that these institutions are able to create this perception of reality that is 27 times manipulated, or every dollar equates to $27 leverage. And so these banks have had free run on suppressing price and being able to do what they want. The caveat to all of this is what we are seeing happen with the drawdown on SLV and COMEX and the LBMA, where it's easy to suppress price when no one is taking away all of the inventory. But you try to suppress price and all of a sudden get requests or demand for delivery, it changes the whole backdrop. And I just have this feeling that we're getting much, much, much closer to that end game moment where these banks really don't have the desire to play in that risky of a situation where you're seeing huge requests for delivery and not enough silver to back up even remotely the amount of contracts that have been issued. And I think we're getting really close to that moment. Maybe it's the fact that we're seeing not as concentrated of a position amongst these big banks, and doing things like pulling it out of SLV instead of messing with COMEX contracts, which obviously is a very dangerous game right now in a world that is accumulating hard assets.
I think you're 100% right. And also I always go back to what are the big guys doing. Ted Butler's been writing stuff lately about the managed money. They aren't really going as long as they used to go. And he's only seen this twice in history, once in 1979 and another time in 2011, right before the big jumps, because basically he said all these managed money people go to their experts. Their experts are their brokers, their JP Morgans, their Citibanks, and they're telling them, oh, take your profit. You've got a good profit, take it now. And so it really you might think, oh, that sucks, but actually it doesn't, because that's the managed money longs are the fuel for the slams,
right?
Because they play the crazy, moving average game. And
yeah, whenever you see record long positions by the managed money, in fact, Ted Butler always says, I was very disappointed to see the massive increase in managed money long. Most people think, well, why isn't that bullish? These are the big hedge funds. Yeah, but they get whipsawed every single time, rinse, wash, and repeat, by the commercials who have deeper pockets and the ability to continue to suppress a rising market. Mm-hmm. That's the danger of what they do. They short a rising market, and you better have one hell of a deep reservoir of money and nerves of steel to suppress a rising market rather than a falling market. So, yeah, one of these days maybe we'll be right.
Unless it's they're in on the game. If all the the Citibanks of the world and JP Morgans are telling their clients, all right, it's rising, we're going to want to stand put, and at some point we're all going to go short, and they're all saying the same things and to their clients, that's what's going to drive the market. That's how the game is played. And like Ted said, it's only a couple times in history that he's seen what's kind of developing right now, and it was in '79 when silver rose to $50 for the first time. And then 2011, when silver rose to $50 again. I mean, the reality of silver trading at less than 50% of its all-time high is probably the most ridiculous thing I've ever heard of.
Especially in an environment where all asset classes have been blown unrealistically high. It's even more egregious. But I also find it more bullish if you look at things from a contrarian point of view. Price is smashed, rhetoric is horrible, everyone thinks you shouldn't be buying it, yet the drawdowns, look, to pull silver off of the LBMA or the COMEX, you have to be very sophisticated. It is not an easy thing to do. It's not like calling Miles Franklin to buy a 1,000-ounce silver bar. Pulling off a contract is very in-depth. It's not easy to do. You're talking sophistication, wealth, and closest to the information. And when all of this silver gets pulled off, one of the things that I want people to understand is that, we've done a couple very large orders lately in 2022, both of them very, very large, and both of them had a good amount of 1,000-ounce silver bars in them. And they were left at Brink's JFK. And one of the clients who bought over 1 million ounces of silver in 1,000-ounce bars wanted it stored in our Brink's Salt Lake City program. And I told the person that I buy the bars from, who has them all in Brink's JFK, they're a part of the Royal Canadian Mint, and I said, I want these bars. Here's the price that you're quoting me on these 1,000-ounce Royal Canadian Mint bars here. What about having Brink's deliver them to Salt Lake City for me? He says, Andy, you don't want to do that. I said, well, why is that? He says, because it leaves the COMEX chain of custody. I said, but it's going from a Brink's facility by Brink's truck to another Brink's facility. It never left Brink's custody. He says, true that, but it left the COMEX chain of custody. And if Elon Musk offers $50 ounce premium for every 1,000-ounce bar that people want to sell, that person would not be able to take advantage of that because they would need to be reintroduced into the chain of custody, which would be costly and take too much time. And so the point I'm getting at is that when this stuff leaves COMEX, it's a one-way ticket. It's never coming back. There is no reason to leave the eligible category unless you want out altogether, and it's going somewhere else. And when you see these record outflows and then see that India imported 300 million, questions, where did it come from? Yeah, a lot of it came from the Swiss refineries, but a lot of it came from the COMEX, a lot of it came from the LBMA, and probably some came out of share redemption out of SLV. The point of it is that it's getting harder to do that, but when it leaves, it loses all industrial liquidity, so it is never coming back. So when you see these delivery numbers, you should put an exclamation point after it. It's not just someone taking possession of metal, it's someone taking possession of metal in a form that the reason to keep it in this form is for the industrial liquidity. And you have just saying, I don't want that, I'm sending it somewhere else. And I think it really adds to the story when you look at it that way.